T minus 2 minutes. T minus 1 minute. T minus 50 seconds. T minus 40 seconds. T minus 30 seconds. T minus 20 seconds. Ten, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Hey everyone, how's it going? Is it ICP, guys? We'll talk about ICP. Yeah, I mean, we'll be talking about a whole bunch of stuff. Mainly what I want to talk about today is just talking about if we did see the top of the market. Of course, this is all my opinion, but we'll be talking a little bit about that, what we could have seen potentially that might have looked toppy, some various types of things like that, and then also maybe what we have coming up and why there's kind of some of the case to be made that we haven't actually seen the top yet. We're just going through like a little bit of like a maybe like a bull trap, a bear trap. Can't remember which one's the upside. And then, maybe we'll see kind of a move back to the upside. So that's what we're going to be talking about today. Obviously, any questions, things, I'll kind of keep a loose eye on the chat just in case any of you guys have any questions, anything you want to talk about, address specifically, anything like that. But otherwise, I'm just going to kind of keep rolling through and kind of talking about what I think is kind of potentially a looser case to be made for I guess I'll give you my TLDR right now. I don't think the bull market is over. I do think there's going to be a pullback probably, and I think there's going to be probably a pretty decently sized pullback and potentially a pretty extended pullback. But overall, I think over the long period of time, it depends on how you define it, right? Do I think we're going to go down 50, 60, 80% from here? I kind of doubt it, but again, we could, right? I mean, there's a lot of macroeconomic stuff going on, and that's kind of what I want to hammer on today specifically is the macroeconomic things that are kind of looking in our favor, and then some of the macroeconomic things that are not looking in our favor. So we'll be talking about that. But the biggest thing I kind of want to start out with is obviously, let's see. Hey, Jack. Hey, John. How's it going, guys? Thanks for tuning in. I'll probably be doing this for about, I don't know, probably 30 minutes to an hour, kind of depending on some of the interaction we get and stuff. But I kind of want to do kind of make this like I would make a live video, or not a live video, but like a pre-recorded video, kind of talking about some of the thoughts, some of the like ideas that I have put together, some of that type of stuff. And then of course, answer some questions kind of real time. If you guys do have any answer, obviously address comments, things like that. So that's kind of the plan here today. So let's go on ahead. We'll start out kind of moving right on into it. Let's do this and we will do that just to, oh yeah, I appreciate it, John. I mean, I don't normally watch the number too much, especially right now when the market's bad. I mean, just nobody's listening to crypto YouTube, which is totally fine. But yeah, I don't usually pay too much attention to it. That's kind of why I wanted to kind of keep this as more of like a pre-planned video, just because I wasn't sure how many people would show up, and then obviously address questions as they come in. So that's kind of the plan today. What we can see on the day, of course, is greenish. I would say Pi has really been having a problem. We'll talk about this maybe a little bit in more detail. But you can see IMX actually bouncing a little bit, which is kind of surprising. If we look at IMX, I mean, it is just down horrendous on the year, which has been kind of nuts. We can see Cosmos doing pretty decent here. Bonk doing fairly well, Pi doing very not well, DexE not doing too well, but it just kind of depends. Let's see, Jack, I'm a 5-year Pi vet, not selling, patience and let it mature. Yeah, so this, you bring up actually a really, really interesting point, so Jack, and I'm going to push back on your comment maybe a little bit. I'm not saying that you're wrong, but I have kind of been on the opposite side of this with other projects, and it hasn't always worked out particularly well. And so we're going to talk a little bit about that. I'll actually go and I'll bring it up right now. But yeah, right here, perfect example, Helium. So I was in Helium kind of in like 2020, 2019. I was probably in when Helium was kind of like $4, $5, $6 kind of initially. And then I was Helium mining all the way through the bull market. If any of you were kind of around then, Helium did very, very well for itself. Let's actually go to CoinGecko. We'll just use this recent one. I'm not going to be looking at Plume today, probably, but who knows? We might. We'll get to Helium. Okay. So what we can see here is $3 right now, decent. But what we're looking for is we're going to be going to the Wayback Machine. So I was in Helium probably kind of in this range, February, March, kind of right before it really started to take off. And same type of thing, I kind of had gotten in. I really believed in the project, still believe in the project, if I'm being honest. But we could see, it came really far up, topped at about almost $20. I was like, yeah, I'm not selling. This is a really strong project. I'm going to keep on it. This is also when I was like a little bit less familiar with crypto generally. And so I was like, I wasn't kind of scaling in and scaling out like I do now, just because that's just kind of a rule to make sure something like this doesn't happen. Then we can see it comes back down to about 10. I'm like, okay, whatever. And then it kind of continues to go up. We see it actually top at like $55 or something like that. Really, really impressive number. And then obviously it bleeds away basically like down to like $1. That's like 98% drop. Really, really brutal drop for Helium. But we can see it's come back a little bit. It's hit $8, it's hit $9. I think it's actually topped over 10 at a couple points. Yeah, it might have actually topped at 10, like just barely right there. But I guess kind of the story to this being is that I believed in Helium. I still believe in Helium. I think Helium is a fantastic project. Actually, I think objectively, Helium is in a far more sustainable and like long-term like strong position here than they were here. But again, price and value move differently from each other, right? And so I think that's one thing that's very important to consider is like with Pi, yeah, it could be good long term, but that does not mean that price is going to be higher than what it is now, particularly with some of like the vesting schedules and some of that type of stuff. So you can believe in something and encourage that, but just really make sure that you're not bag holding for forever, because I did kind of learn this the hard way. So hopefully I can save you a little bit of money by doing the same. Oh, Mohammed back here with everything basically to zero. For those of you who are unfamiliar with Muhammad in the comments of my videos, basically likes ICP and Bitcoin, which I agree. I mean, ICP and Bitcoin are great. I disagree with some of the altcoins, but obviously, different strokes for different folks. Everybody's kind of got their own opinions with that type of thing. But moving back to the crypto bubbles, we can see kind of a little bit of a nice bounce here. Even weekly, it's been okay. Cake has been a little bit of an interesting one, just because you can see like it's kind of moved up in an otherwise like kind of bad market, but then it's kind of was like moving down in like an otherwise like kind of good market, right? If you look at like, it topped kind of here in December, but like while everything else was going up for alts, it was just getting hammered. And then alts started to drop and then it's been going. So I don't know, like Cake's kind of a weird one. So anyway, that's kind of what we're seeing here, kind of with the overall market. Still very, very, very negative on the month. Story Protocol, Pi, and Kava kind of being the big ones up. I guess we could throw Cake in on there as well. But that's kind of generally what we're seeing. I mean, a lot of altcoins getting absolutely trashed. We did look at this in a previous video as well. If we look at altcoins on the year, I mean, it's brutal. I mean, you can see Helium down 50%, ICP down 50%, Arbitrum 80%. I think Polygon, I'll find Polygon somewhere on here, but like Polygon, I think is down like 80%. I mean, just so, oh yeah, right here, 78% right there. Obviously we have a couple here that have done quite well. XRP kind of probably being the biggest of them all. Bitcoin being large too, so that's a good one as well. But yeah, I mean, we can see a lot of altcoins just getting absolutely shredded over the past year. And keep in mind, this was like during the election of the pro-crypto president, and this is during like a lot of this like allegedly bullish things for crypto, and we just haven't really actually seen that materialize in prices, which I think is a little bit interesting. So if we go and we take just a quick look at BTC, we can see on the BTC chart, kind of in the very short term, we can see kind of some pretty interesting things happening. So the most important thing that I want to focus on here is this is kind of where I got like, where I was thinking we could potentially see some life here. And then obviously we got very, very quickly rejected. We've been seeing this kind of descending trend line form for, basically since like the end of January, if you want to call it here. Maybe you could even say up here, like kind of at the 20th of January, but it's been a consistent downtrend since then. And so because of this, when we saw this kind of little bit of a run up, obviously we got a little bit of some momentum here. We still kind of do. If we want to look at like the very, very short term, we can see a little bit of an uptrend ish. It's not perfect, but it looks, you guys could probably see what I'm getting at here. It hasn't been broken yet technically, but it's a much less stronger uptrend than strong downtrend that we've seen, because obviously this downtrend has been in the works for probably about 2 months at this point. So, potentially still the opportunity to break out of here. I think what happens kind of at this point, if we can maybe continue on this small uptrend and break the downtrend, that's going to be a good thing. Obviously not a great thing if we see kind of the downtrend continuing. So that I think we are going to see kind of a little bit of a make or break point in the near term, kind of probably between end of March and now. And then I think kind of the like major events that we're going to be seeing happening in crypto probably come in like the midsummer timeframe, if I had to guess, just because that's when. Actually, let's move off of that, and we will go over to right here. This is when quantitative tightening is expected to kind of stop. Rates may continue to get lowered. None of this really seems to be in the cards kind of prior to June, from what it sounds like. I think quantitative tightening, they were planning on rolling off kind of like June, July-ish. What we can see is this is a chart of balance sheet assets. So this just kind of helps explain what quantitative easing versus quantitative tightening is. As you can see here, we'll look way, way back. And just so you can kind of see a trend line of kind of how the Fed works. This is a daily indicator, but you can see here, kind of 2007, 2008, 2009, the Fed did not even have $1 trillion of assets on their balance sheet. The great financial crisis happened. Obviously, there was a ton of money printing, kind of ballooned up about 2.5x to about 2.25x to about 2.25 trillion. We can see here it kind of meanders along. We see a little bit more happening in 10, 11, where we kind of were seeing some of the knock-on effects of the great financial crisis. And then from here, again, kind of some more meandering. And then again, this is ultimately when the market was doing pretty well. We continued to see the Fed print money. And I think this is kind of what set a bit of a bad-ish precedent, right? Of just like using the Fed as kind of like a sledgehammer to move the market in the direction that you want it to move, which can be a little bit challenging, if we get into political things, which we won't. But that is kind of something that can be a bit of a concern here. And then we can see that it kind of weans off, right? We don't really see much in terms of easing or tightening. It's just kind of like doing its thing. I mean, you can see it kind of moves from like 4.52 down to like 4.46, kind of in this like 2-year time span. I guess this is almost even like 3 years. So really not a whole lot going on. And then we can actually see in 2017, we really started kind of the quantitative tightening, and we kind of buy our assets, or I guess sell off the assets back down to about 3.75 trillion. Again, trying to limit the government's kind of involvement in the public markets. And then, of course, we all know what happens here. We start to see a little bit going on with rates happening. And then, of course, COVID hits. We immediately inject, what is this, like $3 trillion into the financial system, which is kind of crazy. And then, obviously we start to divest a little bit. And then again, as the knock-on effects of COVID continue, more and more and more money being printed. And then we kind of get to this point here. I'm sure if you guys have been investing in the markets since then, I'm sure you're brutally aware of what has happened since we've seen this kind of happening. And it's just been, like the tech stocks were getting trashed. Crypto got trashed. Obviously there were some other issues in crypto as well with like Luna and FTX and things like that. But yeah, just always continue. We've seen the Fed kind of sell their assets down from about 9 trillion to about 6.75 trillion. So moving in the right direction. We're still not really, we're kind of below kind of like the peak of money printing, like immediately post COVID. But we're not even close to any of the money that we've seen pre-COVID, right? And so obviously, we could sit here and talk about what's best for the economy, all this type of stuff. But right now, I think the thing that we're seeing is that realistically, the quantitative tightening should not be stopping. It should continue to be coming down. This is kind of just setting a bad precedent that the Fed can play an ever active role in the markets. Again, this is just my opinion. You obviously can agree or disagree, but the amount of money that has come out is still not equivalent to the amount of money that's come into the market in a much actually shorter time period as well. So that's something that we need to think about. We're going to get into like some of my thoughts in terms of like the macroeconomics and what I actually think might be very, very bearish for crypto in the short term. But then we'll also talk about some of the bullish things. And so what we're kind of looking at, in my opinion, is the possibility of kind of a reset going on. And so we'll talk about that a little bit. Let me just catch up on comments real quick. Let's see. Yeah, Jason. Yeah, it is a rising wedge. Oh wow. Okay, Muhammad's going ham on the comments. Let's chill out on the comments, Muhammad. That's things are going crazy there. Tau. Yeah, Tau's a good one. ICP's a good one. BNB is a good one. Not heard of auction. Oh, interesting. That is shocking to me, Muhammad. Mr. Everything to Zero. I'm really surprised that Metis is one of the ones that you're bullish on. Would you compare Arrow to Cake? Yeah, I can talk quickly about that. Let's do that, and then I'll kind of try and continue to get caught up on comments and move through that. So the difference between Aerodrome and Cake is not actually too much. It's primarily like Aerodrome's on Base. Cake started on BNB. Cake has kind of gone, multi-chain, kind of taking like the Uniswap type of thing. I would say Cake is probably, I haven't looked at like the stats, but just from my perception, Cake is probably like kind of second to Uniswap. I think Aerodrome could kind of be at like the Cake tier. It's probably not going to be Uniswap tier, but it could be at the Cake tier if we see Base take off. I think Aerodrome is kind of like a beta play on Base specifically. So if you are bullish on Base, I think Arrow is going to be a really, really good potential coin to look at. Again, who knows for sure exactly how price will play out, just because so much of crypto is speculative. It's one of the things I really don't like about crypto, and at least in its current form. And this is something that I think we might see change in the next couple of years. We might have kind of like a utility season, and like a real utility season, not like oh, hey, my coin does things and allows you to vote. Like that's not utility in my mind. But yeah, so I think Arrow is they're very similar. I think Arrow, of course, since it's younger, it's not going to be kind of as versatile and well built out as Cake. Cake did very, very well in the last bull run, so it's kind of had that time to kind of mature and do all that type of stuff. So I do think that like Arrow, in my mind, Arrow is one that like if the investment works out and pays off well, it would kind of become equivalent to like a Cake, maybe even pass it and go to like Uniswap. But again, I think that's very unlikely. I think kind of finding it as like a Cake competitor or a Cake equivalent would kind of be my my take there. Let's see. Yeah, rising wedge. Yeah, so yeah, when we were going over the Bitcoin chart, definitely looks like a rising wedge. But again, we got to figure out, and for everybody else, we'll kind of bring this back. There we go. you know, we do have this kind of little bit of a rising wedge going on. Again, this is looking at the daily. So if we were to look at this on like an hourly, it's going to look much, much larger. But you know, it's just, we got to figure out, you know, is this trend line greater than this trend line? And obviously that, you know, there's a lot more historical precedent for the descending trend line. But you know, we could potentially, you know, we do have some upward momentum here. So we just kind of got to see what happens. The only thing we can see is, you know, obviously we did kind of have a little bit of momentum, and we did get pretty quickly and pretty strongly rejected once we did hit that trend line. So just got to figure out kind of what things are looking like there. And then obviously we can, you know, we can get some better information. So Jack, what would be a good app? And I really apologize if I'm saying your name wrong. I feel like I'm probably am. I just don't exactly know how to say your name. So let's see. What would be a good app to follow market trends? Jason says CoinGecko. CoinGecko is a good one. We could see here, I was actually that's what I was using to look at helium. It's a good one because you can see, obviously it goes by like top 100. It also goes through and does categories as well. So like if you want to look at like, you know, you want to look at like gaming blockchains. Okay, cool. Well, here's all the gaming blockchains. You can see what they're all about, things like that. The other one I would say as well is CoinGlass. CoinGlass is really good. I'll actually see if I can, I'll have to see what it looks like, but I've actually built a dashboard. It's my own dashboard that I've made. It's called the Market Overview. You can see Kate O'Neill. You actually might, if you just follow this link, you might be able, I don't want to post links just because I'm afraid of people getting scammed. But yeah, it's just coinglass.com/pro/dashboard/Kate O'Neill-market overview. I think you should be able to like find this. But this is just a chart that I've built. This is where you can see these are kind of like four of the most like important kind of like anchors to the crypto market. If you ask me, we have open interest and volume. This is just for Bitcoin. I wish it would let me do the whole market because they do have a whole market chart, but you can't. It's lame. Like some of these charts have reduced functionality, which is kind of annoying, but it is all in one place, which is nice. You also have the RSI heat map. This is a really good place to kind of get a general sense of like, how's the market feeling in terms of like the alt market, right? Because Bitcoin is in here. You can see Bitcoin's like right here. Yeah, right there. But like I mean, Bitcoin's just one, right? And Bitcoin kind of moves different from the rest of the market. That's why we do have kind of this open interest. This kind of gives some level of sentiment. And since Bitcoin does lead the market, like you can see, you know, there's a lot more volume kind of back here in 2021. Then things kind of came down. We saw a little bit more volume back here in March. Then we saw that summer lull. And then, of course, when we saw, you know, back in like December, whatever, things really went crazy. You know, we could see both, you know, volume exploding, price exploding, open interest exploding, all of it. We can see open interest has come back down. And then we also could see, you know, kind of moving back to RSI heat map. The market overall, the RSI average is about 46. So just under neutral. You know, we could see a handful kind of an overbought, really only just a couple. You can see a couple in strong, the vast majority of the market in neutral, and then a handful in you know, kind of weak and oversold. So something to think about there, and just kind of something to look at. If we look at the crypto fear and greed index, same type of thing. I'm sure many of you are very familiar with this. So I've got this on here. And then if any of you have been following the channel for any amount of time, you guys know that I love the liquidation map. I think this is a really, really like very strong indicator of kind of giving it at least a decent picture of where the market might be going in the short to midterm. Now, it's not going to tell you it's going to go there tomorrow. It's not going to tell you it's going to go there next week, but it is probably going to give you a general sense. Like if we look at like the 7-day, again, they also have 30-day as well. So, you know, I wish we could see the 30-day from here, but we can't. We can see, you know, if you look at like the shorts, the you know, or I guess not the shorts, but the liquidations of longs, i.e. a price moving to the downside, that actually currently is more valuable to exchanges than the liquidations of shorts to the upside. So this can mean that potentially we see a move to the downside. Now, again, it doesn't have to be a big move to the downside. If we look at kind of the magnitude, that these are kind of like the number of shorts and where they're placed and all this type of stuff, we can see a lot of the shorts really get liquidated if we kind of head down to this like 82K range. So we could kind of see like a really quick move back down to 82. And then kind of likewise, we could even see a super quick pump back up, maybe to like the 86. And then, you know, realistically, it's like, you know, what is this? 3 billion gets liquidated here. and then like 2 billion gets liquidated here. So if with a quick like 6K price move within the span of like a day, you realistically could liquidate like $5 or $6 billion worth of money. So this is why I tell people, like, when you're leverage trading and doing all this type of stuff, you really have to be quite careful, because this is like what I call like a rogue wick, right? Because a rogue wick could come down, wash all these people, come up, wash all these people, and then return back to normal. And it's not going to take too much money to do that. At least it's not going to take more money than like an exchange can float to like make that type of move. And then obviously, they'll be making money off of liquidations. So again, maybe that's a little conspiratorial, and because that's not necessarily confirmed. There's a lot of people who weirdly don't think that happens, but I would be shocked if it doesn't happen. So anyway, those are probably kind of the two best places I would say to look for kind of just keeping up on like a general like market overview is kind of what I would say here. Let's kind of just take a quick look at Noel Sack. Thanks so much. I appreciate it. Yeah, obviously doing my best to kind of keep you guys updated and keep you up to speed with everything that's going on in the market. Obviously now is not the best time to be in the market, but it is, this is where money's made. It's not best time for profitability now, but it's going to be the best time for profitability 6 months, a year, 2 years, 4 years, 5 years from now. I guarantee that. Again, I can't guarantee anything because I don't know what the future holds. Crypto could blow up tomorrow, but it's my opinion that I think, right now is the best time to be in, because when you're buying the tops, that's usually not a great investment strategy. So B-Dog, yeah, appreciate it, man. Yeah, Tyler, Doc, all really, really, really quality people, really quality content creators, all make really, really good stuff. So yeah, I feel honored to be in company with them in that comment. So let's see here. What are your the thoughts on the fact that Pi Crypto Toy is not communicating, text not being so commercial? Yeah, I mean, here's the thing with Pi. A lot of it is just people selling off because I think price is going down. I think some people are selling off because there's fear. But a lot of this is like, I mean, the market's just doing what the market does. I mean, that's kind of how I look at it. I don't see anything like fundamentally different with Pi from anything else other than it was more hyped and it had more eyes on it. I mean, ICP's done this for a long time. ETH has done this for a long time. Like, there's a lot of projects that are showing very like heavy weakness. And so I think, Pi, the fact that it's selling off in a bad market, that makes total sense. I don't know that that's kind of like too surprising to me or like anything concerning. As far as like the crypto Twitter, it's hard to say. Like I do think it does bother me when projects aren't super like communicative, particularly when their projects aren't doing well. But also it's like, what do you expect them to do? Like, you want them to like handhold us on, be like, yeah, we know price is going down. Sorry. Like, I don't know. I don't exactly know what like the response would be. Because it seems like some of these like scammy tech issue comments, they seem to be limited. So I don't know if there's like actually a fundamental tech issue there. If there was, then obviously I'd expect something from the crypto Twitter team, or just like kind of the Pi team generally. But that's kind of one thing that I would say I would kind of think about there. And then with the tech, I don't quite understand the last part of your comment. So feel free to clarify, but I'm going to take a guess at what I think you're meaning. And I'm thinking you're meaning like the actual technology itself maybe doesn't have a whole lot to do on it yet, things like that. This to me, I think is like, this is normal, right? I mean, it's like obviously it's not a new project, but like as far as like the coin and like actually being able to use the system as like a form of like transaction, that is kind of new, right? Because the Pi coin is new. And so I think it is going to take time for the system to mature. And if it even does, right? I mean, nobody knows for sure. That's the big thing in crypto is like, people like make a lot of promises and most of them are broken, if I'm being honest about it. But that doesn't change the fact that like they could. And I think one of the things that I think Pi, if I'm being completely honest, has a lot of fundamental issues with it. But the thing that does actually kind of make me very interested in Pi is the massive community that they've been able to kind of develop. That to me is an asset all in its own. Now, again, obviously they need the tech and the ecosystem, and they actually need to make it worth something. But they've actually done something that a lot of people have issues with at the beginning, which is finding a community that's actually interested, right? I mean, there's a handful. I think probably the best in the space is XRP. I think that the strength of their community for the tech that they have blows my mind, to be completely honest. After that, it's probably even Bitcoin, just because. And the reason I say this is because I think that the community strength for Bitcoin is stronger, but I think there's a lot better reason to be bullish about Bitcoin, right? If I go to a laser eye Bitcoin maxi and they're telling me all these different things, I'm probably not going to agree with all of it, but it's going to, in my opinion, it's going to have a lot more foundation to stand on over something like XRP. And that's, again, completely just my own opinion. But that's kind of how I look at Pi as well. It's kind of giving the XRP vibes of there's not necessarily a whole lot to go on right now, but that's not to say there's not going to be a lot to go on later on potentially, right? And so I think that they've at least got something good started. Now we have to see kind of what they do with it. That's kind of what I'm really kind of looking at there. Ryan, appreciate it. Thank you for tuning in. I'm glad to be kind of here hanging out with you guys, chatting on a Saturday. Yeah, it's a good day. Obviously, the crypto market's not doing particularly well. We'll get back into that here in a second. But yeah, I'm familiar with Metis. I think that's interesting. I think that's really interesting. I would have not picked that for you to be a fan of Muhammad. Oh, it's Jack in Dutch. Okay, got it. Wally, sorry, I've heard this from a couple different people. No, I don't think that's the case. I don't know why tax harvesting would be one of the reasons that nothing is going up, because at least in crypto, tax harvesting. So in a lot of equities, I think there's either a 30 or 60-day kind of holding period that you need, or not, I guess not holding period, but period of deadness that you need to have for the tax harvesting to be legit, right? So if I sell Tesla stock on December 31 to harvest some losses, I can't just go buy it on January 1st, or else that tax loss harvest is not going to work, right? But with crypto, from my understanding, that's a thing. That's legit. You could even sell it and immediately rebuy it, and you can recognize that loss immediately. So that's one of the things where people have kind of been saying it's tax loss harvest, but that just doesn't make any sense to me, because why would people be waiting 3 months after they sold something to buy it? That's not how the rules work, at least from my understanding, unless I've got it wrong. But I don't think that I don't know. I don't think that is actually a valid reason. So could be, who knows? But yeah, we'll see. Muhammad, I actually think you're spot on with this. I think crypto is going, I think short term, kind of my TLDR sentiments on crypto is I think short to midterm, things actually could get quite bad and continue to get even worse. Potentially, again, I don't know for sure. I haven't sold anything because I don't know that for sure. But I can very easily see a world in which in the short to midterm, crypto gets crushed. But long term, I think crypto is going to be unbelievable. And so I think that's kind of what I'm hanging on to, is the fact that I think short term it's going to make, it's just hard to know, right? I can't tell you where it's going to go. I don't know where it's going to go. There's a lot of different things saying a lot of different things, which is part of why I think it's hard to know for sure. But overall, long term, I'm incredibly bullish on crypto. And so kind of the way that I have kind of shifted some of my investments is I'm not really going for anything that I think could be a short to midterm swing play. Pi, for example, even though I find it very interesting, I'm still kind of sitting on the sidelines just because we don't know what short term holds. Sui, I think Sui is a great project. Not buying Sui because, again, I know that there's going to be a bunch of selling pressure on the chart. So if I have to hold it for 2 or 3 years, it's probably not going to go well. So what I'm doing is I'm kind of shifting my investments to places that I'm okay holding it for 2, 3, 4, 5 years, even if I'm really bullish on a project. I still may not buy it because I've learned my lesson with that type of thing. So that's kind of my general sense on kind of what I'm doing with altcoins right now because of, the super cycle. And again, but when that super cycle happens, we don't know for sure. So that's kind of what I'm That's what I'm doing. Let's see. The added ads to their app. Maybe people hate it and sell their token. So this is I don't know if that's the case. I mean, maybe they did. Or not. I'm not debating whether they added ads or not. I'm debating the selling their tokens part. Maybe this is the thing that like I think people find kind of interesting though, is especially with hype projects like Pi, is like the second things stop going up only, people are like, oh, trash project, scam, sell, whatever. And it's just people being dumb, frankly. So I don't read too much into it. Maybe people are selling their tokens because there's something fundamentally happening, but I'm more of a cynic, meaning that like I think price is going down, so people are no longer happy about it. I mean, that's just kind of seems to be how crypto goes. People are incredibly fickle. Um, let's see. Yeah, I mean, yeah, this is very much the case. Like, and this is a thing that actually really makes me quite sad, is because all the newbies probably aren't here, because they left because they went and bought Bitcoin at 104K, and then now they're down 20% on their Bitcoin or whatever, and they're pissed off because they just lost 20% on their Bitcoin. The problem is like now is probably a better time than 3 months ago to be buying Bitcoin. Now is probably a better time than 3 months ago to be looking at potentially getting into Ethereum. Even things like ICP. ICP is down horrendous over the past like 3 months. If you're interested in ICP, just wait. Don't buy it when it's $15 a coin because it's gone up 100% in the past week. That's a dumb idea. Like if you are a new trader, you have to understand this, because I think I can say it all I want. I do actually think part of it is you actually have to go and lose your own money, just because the stakes are higher, and it hurts more and you'll remember it better, than me just kind of rambling to you on a live stream on a Saturday afternoon. But I will say that like, yeah, I mean, this is very real. Like you have to understand that like you need to be paying attention. And it's the old Warren Buffett saying, be greedy when others are fearful and be fearful when others are greedy. If you would have mapped that over crypto the past 3 months, you would have made a lot of money, right? I mean, like it's not rocket science. It's just people get whipped up in like the, oh my gosh, people are herd creatures, right? If other people are like, oh wow, Bitcoin's worth 100K, well, it must be valuable. I'm going to go buy some. And then it goes down to, 70, 80K. Oh, everybody's selling Bitcoin. It must not be valuable anymore. I'm going to go sell it, right? So you have to kind of get away from that type of mentality and understand what you actually own and what you actually hold, and do your own research. That is, in my opinion, kind of the only way to get around that. Let's see. So Jack, I mean, the scam accusations, all the other things which are yeah, I mean, so the scam accusations, in my opinion, do not bother me at all with Pi. I mean, Pi could potentially end up being a scam, maybe, I guess, but it just doesn't bother me because literally everything that people just decide that they don't like, or realistically, if we're being frank, haven't made money on, is a scam. And so I don't really actually like read too much into the scam stuff, because whenever because I have been getting some more comments on my most recent Pi video, because it's done fairly well. And yeah, everyone's like, oh, you're an idiot. It's a scam. You're a paid shill. You're this, you're that. Okay, whatever, man. You lost money, pretty sure. So like that's usually how I get a pretty good clue on who's actually made money and who's lost money. Because yeah, I get a lot of those types of comments. So okay. So yeah, I mean, maybe we have like different we have different what should I say? Like we have different considerations, I guess, for like what tax harvesting would be. Um so this to me is just investing, right? I mean, you buy high, you sell low, or even if you sell low, wait for it to go lower and then buy back. That to me, like that's not really like a tax play. That's just like prudent investing, right? So that's kind of the way that I look at it. Unless I'm misunderstanding you, that is kind of something that how I would look at that. So B Dog, interesting question. Okay, so what's your top three that you're comfortable holding for years if necessary? I like Ondo, ICP, and Caspa. For me, I'm probably a little bit more boring than that. Ondo I like, but the problem is again, Ondo has a lot to dilute. I think Ondo's idea is good. I think they have good potential, but they're like 30% diluted, which means 70% of the total market cap is not actually currently accessible or circulating on the market. So even though I do like Ondo, I have issues with that. ICP is, I think it's May or June when all of their unlocks are done and it's fully circulating. Now, ICP still does have the inflation issue that is, theoretically at some point in the future going to be offset with the cycle burn rate. But we have to really be watching the cycle burn rate very closely on ICP to make sure that that catches up, because otherwise ICP will just inflate into infinity and it becomes more like fiat than anything else at that point. So ICP I think is a good one. Ondo, I am on the fence about. I currently don't own Ondo. I'm considering making an entry in over the next little while. But yeah, it's the VC funded like heavy lockup coins. Those are the ones that really scare me, because that they did not get in at 86 cents or whatever Ondo's sitting at right now. They probably got in at 10, 20, 30 cents. So even if Ondo continues to go down another 20, 30%, they're still going to keep dumping it because they're still in profit. So the VC coins really do kind of scare me in terms of like the prospect of long-term holding, even though I am actually like bullish and I do think Ondo is good. I was bullish and I thought helium was good too, right? But we can see what happened to price there. So just something to always consider there. Kaspa is an interesting one. Kaspa's price action recently has been horrible. I think their tech overall, I think, has been slower than maybe what some expected, which is why we haven't seen too much like positive movement on Kaspa. It's kind of stalled out a little bit. It saw that kind of like early, really, really strong run, but since then it's just kind of like, it's kind of stalled out. So I do think that like Kaspa, it's not bad because it's not going to have like, a lot of the like inflationary issues, but I do wonder about like the tech development of how close are block DAGs really. I think HBAR seems to be having more success there, but again, who knows? So anyway, that's kind of my thoughts. For me, ICP, Bitcoin, probably so like so if I were to break up into 3 chunks, I would say Bitcoin, ICP, split Solana, Ethereum for the 3rd chunk. That's probably how I would be looking at it personally right now. That's kind of what makes the most sense to me. There's a couple others, like XRP. I frankly don't like. I just don't understand the price action there. So that like that's one that I would never touch. Cardano I like, but I really do want, like they've got nothing to show for their ecosystem yet other than we have good tech, which is great, but like we haven't seen many interesting things building on it yet. The thing that like, ICP also has good tech, but like you can see things actually building on it, and you can see that like the use case and the value and all that type of stuff start to accrue on ICP, which is why I'm like more bullish on something like ICP over Cardano. So that's kind of my general thoughts there. Hopefully that was helpful. I'm going to kind of continue on a little bit talking about kind of the macro. We got a little bit thrown off track there, but with the macro, essentially kind of the 2 situations I see playing out is, as Muhammad said earlier on in the comments, I do think that the super cycle is a thing. I think it will happen. I just don't know exactly when, because what we're seeing right now is I think there needs to be a fundamental reset in asset prices. The stock market, very, very high. Real estate prices, very, very high, problematically high in the US, I would say. And if we look, like so many of these things are actually propped up by government spending, which sounds fine in the short term, I guess, maybe. But if you look at it in the long term, like it's not good for the health of the economy, because if you look like, the economy prior to 2008 was effectively functioning largely without the Fed. Now, if we look at like, the Fed had $9 trillion of assets. I think the total US equities market was like 25 trillion. Like that's a massive chunk of the equities market that the Fed was kind of using to prop up. Like, I don't like the idea that the Fed should step in order to protect asset prices, because realistically, all that does is spark inflation, and inflation is a tax on the poor. So essentially what the Fed is doing is they're sacrificing the futures of the poor and middle class for the asset prices of the rich, very short term. Again, that's what we're seeing. And this is why we've seen so much wealth transferred from like middle class to the upper class, and why we're starting to see kind of some of the splits in terms of like the wealth gap, right? You can believe in the wealth gap, you cannot. I mean, just look at a stat chart. Like it's very clear and very easy to see. And so I think largely why is because we're seeing the government play such a heavy hand in buoying asset prices, even like the prices of homes. Like Fannie Mae and Freddie Mac, they're like the largest mortgage holders in the US in terms of home prices. This isn't a good thing, in my opinion. Like the market should be able to function as it functions. If house prices go down because supply went up or demand went down or both, that should just be what it is. But what we're seeing right now is like, particularly in COVID, we saw rates pumped artificially low. Because the rates are artificially low, now nobody wants to sell their house, which means there's a choke on like inventory. Since there's a choke on inventory, supply has gone down, demand has stayed constant, which means prices still go up. If we look at like building, it's harder to build houses than it has been previously because of all the like regulation and stuff that we have. Okay, supply goes down, demand either stays constant or it goes up. If we talk about like immigration, demand goes up, supply stays constant or goes down, right? All of these lead to inflating house prices, which isn't necessarily, in my opinion, a great thing for the long term, because people can't actually, one thing, there's two kind of tranches, right? The first tranche is people can't even afford to buy a house, which is a problem, because if people don't feel like they have an ownership stake in the economy that they live in, they're going to get pissed off. There's like 1,000 different examples of this throughout history of this actually happening. The second piece, kind of the tranche after you're able to own your own home. Owning your home is kind of like a nice psychological thing, right? But it's not actually valuable from like a productive asset perspective. If I have $10 million in my own house, what does that do for me? Nothing. I mean, I just have a nice house and that's pretty much it, right? Like, but I'm not making any sort of like passive income. I'm not like, my house isn't like, I mean, I guess it technically goes up with the market, which again is another problem as to why we're artificially boosting the housing markets, because that's where the majority of people's wealth is. And so for people to feel paper rich, house prices are going up, but it's also hurting the people who don't have house prices. And so they feel left behind in the market. Obviously, I'm going on kind of like a large macroeconomic ramble here, but all of this stuff kind of ties together in the sense to essentially get back to the point of saying, like, asset prices very likely need to take a hit in the short term to kind of right size and reset everything. I think the government previously has been way too involved in terms of propping up prices that really maybe shouldn't exist. I think some of the prices should, but when the Fed owns at the current point in time $6.75 trillion, like that's almost a quarter of the entire value of the stock market. If the Fed sells all of that tomorrow, the value of the stock market probably drops more than 0.25% because you're having a massive seller on the market. So a lot of this type of stuff, like, yeah, it seems good because number go up, but when nobody owns the number, who cares, right? And so I think that's one of the things that we need to kind of take notice of when we're talking about some of the macro environment. And in my opinion, why we're seeing asset prices kind of get trashed recently is because Trump and the new administration, all these type of people are trying to kind of right size that. And I think for asset holders, for us in crypto and whatnot, that might be a brutal experience. But I think in the longer term, it's probably going to be better for the economy from a fundamental perspective, right? This is the type of thing where you have to think about, like, this isn't about the next election. This isn't about the next whatever. This isn't about my, IRA in 2 years and 3 years and 4 years. This is about like the fundamental foundation of the American economy and even the world economy, because the whole world is very, very over leveraged, right? And so this is more of a kind of a testament to making sure that we're kind of right sizing the economy and right sizing spending and right sizing asset prices and all this type of stuff to make sure people feel like owning a home is a reasonable thing for them to do. It's so that they can feel like, being able to invest in the S&P is a reasonable thing to do. Owning crypto, owning whatever you want to invest your money in, But like right now, I think, since asset prices are so inflated and wages really haven't kept up, again, because of inflation is a tax on the poor. It's just how it is. This is what's kind of causing a lot of this type of stuff. So anyway, that's kind of my long-term kind of spiel and kind of contextualizing why I think in the short term, it could be very, very bad for assets in general. Obviously, if assets go down, crypto is like a beta play. It's like the most risk on of all assets. So if assets collapse, we see home prices going down, we see stock prices going down. Of course, crypto is going to get obliterated. I don't think this is out of the question. So this is one of the things where I'm like, I'm prepared for that possibility, right? But in the longer term, again, if money continues to be printed, we see it continues to get printed. If we go back to the trusty old Fed assets here, this is like, if you look at the trend here, since it was tracked in 2003, let's just take a look at a trend line here. What direction does that go? Like up only, basically, right? I mean, this is the longest period of selling off that we've, I think, ever seen in terms of the Fed owning assets. And this is like, it's still higher than what it was even at its previous all-time high, right? And it's still like 50 to 60% higher than that. So even though we are seeing some kind of like some quantitative tightening here, they've already indicated that it's going to stop. They're probably going to start quantitative easing again, in which it's going to go up another, order of magnitude or double or triple or whatever. So again, even if we map this out, let's kind of zip this out a little bit. But even if we map this out, what even is this for a date? I don't know if it'll tell me. It's like at some point in the future, it's probably 2028, 2029. The Fed's balance sheet is going to be double what it is now. Again, if we keep kind of the same trend that we've had. What's that going to do? Push fiat inflation. What's that going to mean? Assets become ever more valuable still. So unless we can see a meaningful trend change and a reduction of asset prices and things generally, long-term still super, super bullish. I don't think the American people or really anybody have the political will to like actually fix the problem that we have. I think overall they're going to wait until the problem can't be fixed and we don't have a choice. It is kind of my opinion on that. But what this means is, even though we may try in the short term, and this would be very damaging to asset prices, long term, particularly things like Bitcoin, stores of value, things like that, very, very bullish. So that's what I'm looking at. We are seeing, liquidity is going to be pumped into the ecosystem. And that is kind of the thing why I haven't sold everything. Obviously, I've been telling you all the reasons as to why we could see some really, really damaging price movement in the short term. But I mean, liquidity is going up. Rates are going to be getting cut soon. Quantitative tightening is coming to a stop. When they start quantitative easing, maybe they do, maybe they don't. But if you look at the 2017 bull run here, quantitative tightening. I mean, it was like basically flat, right? But like it started into quantitative tightening when we saw that 2017 bull run. It was like right here where the Fed was just, actually we'll zoom in a little bit more so we can see better. But like, yeah, I mean, like the blow off top was like December 17 or something like this, right? Like this is kind of what happened to the Fed when we had that first bull run. So you don't have to have quantitative easing for like the Fed to do well, but you do, I think, need a period of at least consistent rates, potentially lowered rates. The thing that we have different now is tariffs. I think tariffs are not necessarily inflationary if other things are kind of given back. So for example, if tariffs are introduced, yet income tax is cut, then it's going to be net neutral, maybe even net negative, something like that. But again, if taxes stay and tariffs come and all this type of stuff, then yeah, of course it's going to be inflationary. But that's kind of how we have to kind of take a look at that in the short term. So let's take a look here. Yeah, B-Dog, let's see. Appreciate the info. Yeah, I mean, that's just it. Like, yeah, I mean, everybody who's kind of a new entrant to crypto gets wrecked on alts, almost certainly. I mean, I think that's just kind of how people learn. And like I said, I from my opinion, I don't actually think people really learn unless they get wrecked. Like if you paper trade and do all this type of stuff and do the exact same thing, is my opinion that if you were doing that, you probably wouldn't actually see anybody well, like you wouldn't actually see anybody learn their lesson. Is kind of my opinion there. So that's kind of, yeah. I mean, that you just got to pay the tax. And then let's see, Jack, same in Netherlands. Low interest rates, immigration, high demand. House prices are skyrocketing. High inflation, 4%. Many people having financial problems. Yeah, exactly. I mean, this is kind of the problem throughout much of the Western world. I think we could even throw China into this. China's a little bit different because they don't necessarily have like population growth problems, but they've got debt problems. I mean, the Chinese government massively levered themselves to essentially have the like boom of the past 20 years. Obviously, the boom of the Chinese boom of the past 20 years has been massively impressive, and it continues to seem to keep going. But also, we have to think like, again, this is not me advocating for authoritarianism or anything. This is just me pointing out a fact that when you have a regime like the Chinese Communist Party or Vladimir Putin or somebody like that, they don't have to think in 4-year cycles. They can think in 20-year, 50-year, 100-year cycles because they're probably going to be in power the whole time. And if they're not, they're going to pass it on to somebody who's very friendly to them in their like worldview and their thinking and stuff. So again, I'm not, to make it very, very clear, I'm not advocating for authoritarianism, but it's just something that like, that's just kind of a fact of the matter of how that type of thing works. Right. And so generally kind of, some of these more democratic societies are going to be a little bit more volatile just because they can't, if, I mean, look at the US over the past 8 years. We went, or I guess longer than that, right? Obama, Trump, Biden, Trump. I mean, what kind of political whiplash is that, right? Like the Chinese have not had to deal with that, I would say for worse probably, but the silver lining there is they actually can have a coherent vision that gets laid out over a very long period of time, and they can essentially force their people to take the short-term heartburn because of the like potential long-term gains. And so that's just something to be very, very clear about. Of course, not advocating for authoritarianism, but that is just kind of what that is kind of one of the things that, or one of the kind of key differences there. So, but again, in the US, in the Western world, I mean, I think it's very clear to see this is where people want to live because of the immigration. Immigration to the Western world is very, very high. And in large part, some of the problems that we're seeing with like inflated housing prices and stuff is because of immigration. Again, that the only way to solve housing problems is not to just stop immigration, it's to make it easier to build houses, make it so the zoning rules aren't so stupid, make it so the building requirements aren't so stupid, like let people just build houses. You can see that like some places that have kind of started down this road have actually seen immediate success, Texas probably being the like number one. And you can look at Texas, like Texas is a border state, of course they're going to have a lot of immigration, they're right on the border, right? But houses and rent and all these types of prices have gone down consistently for 2 years in a row now because they're just allowed to build more houses. They've kind of gotten out of their own way with respect to like regulatory type of stuff. So that's another way. Decreasing immigration is one way. I would say that's maybe not the best way, but it is a way. The other way I would say is just get people, like let builders do what they do best, and that is build stuff, right? So that's kind of my opinion there. But yeah, I think that's like a lot of what we're seeing here, Jack, through a lot of the Western world is it's a combination of immigration, it's a combination of overregulation, it's a combination of kind of the federal governments playing, in my opinion, a bigger role in the market than they potentially should, just because they've got so much vested in the market because they don't want their people to have any sort of like near term financial pain because they know it's going to cost them the election. Now, again, I understand that like the Fed's supposed to be apolitical and all that type of stuff. If you buy it, congratulations. I don't. So that's just kind of my opinion is, politics plays very, very heavily on our fiscal policy. I mean, you can even like, and this is not to say that it cuts one way or the other, right? I mean, you can see that the Biden administration printed an F ton of money, but you can also see that Trump is the one that started sending out stimulus checks, right? So it cuts both directions. I'm not saying like one particular group is guilty of this and nobody else is. I mean, basically everybody does it. But when you start using fiscal policy to like win brownie points, that, in my opinion, is a big problem, and it's not going to be like long-term sustainable or healthy for an economy over time. So anyway, that's kind of my overall thoughts with the macro environment, what we're seeing there. Like I said, I'm still very, very long-term bullish, kind of going back, Mohammed's saying something similar. This is our last 100x cycle. After this, all poop tokens will go to zero. Yeah, I mean, I would even be surprised if we see, I mean, maybe we see like 100x cycles on like some smaller alts, right? But like, I would be interested to see kind of what level of, I think a lot of like the price appreciation depends kind of partially on what we see out of the macro economy as well, right? Do people have money to spend? Is money being inflated to zero? Are, people financially in a position where they can kind of spend that type of money, speculate, because a lot of the things that we saw in like 2021 when we saw that crypto run is, even though people, like, it was like a financially stressful time because of COVID, there were a lot of people who were on unemployment. So they were kind of getting paid anyway. There obviously was the uncertainty of what would happen with their job, and people were stressed out about, people dying and all that type of stuff, rightfully so. But they also got, what was it, $2,400, $3,000, $5,000, depending on who you were, of like stimulus money. So they had a bunch of free money being given and deposited into their bank accounts. They had a lot of money to spend. And I think the way that you get back there from from an economic perspective is, one, I guess you could give more stimulus checks. I think that would be a terrible idea. Or just make people better off, right? I mean, kind of, change the economy around and get people better off, more, more, incentivized to be part of like the West's success more generally. Obviously, I'm in the US. I'm speaking mostly to the US just because that's my experience. But I think this kind of applies largely to the West as well. So, but yeah, I do think that like we will probably every kind of succeeding cycle from here is going to be lower and lower in magnitude than what we're seeing right now, right? I mean, you can kind of see that with every type of tech adoption, right? The kind of the people at the beginning of the wave are the ones who make the most, because there's obviously the most risk there too. Once crypto becomes more of a known commodity, there's less of a premium there in terms of like risk reward, right? So something to consider there. Yeah, I mean, less rules is good. Like, and obviously, there's always kind of like the line you have to walk of like, well, you don't want it to be like the wild, wild west where people can get scammed and all this type of stuff. But also you don't want it to be like, you can't do anything without having to like ask for permission first, because that's super lame and that kills innovation, in my opinion. So I think that's kind of what we got kind of going on there from just the overall macroeconomic environment. Like I said, talking about some of the top signals we could have seen, I think Trump coin could have been a very strong top signal. I think just the overall 2024 election could have been a strong top signal. Again, and I actually do remember when I saw Bitcoin break 100K, I was actually with Tyler, and we were talking about it, and he was like, he basically said something along the lines of like, if this is the top, like this could be the top, right? Like it would not surprise me if this was the top. And we were kind of just talking about that when we all basically came to the conclusion of like, I don't think it is, right? But like, if it was, like, there would have been signs, and it would have been signs that it was a very, very lame bull run, right? But like, there were some signs there, and so that's the thing that like, same thing with Trump coin. Like, there's a lot of people that I talk to, they're like, oh yeah, as soon as Trump came out with his own coin, I sold everything, because like that was like the most top signal we had seen since like, the kind of the previous run up. And so, I do think there's a little bit to that. I still personally, I don't think we probably maybe seen like a local top, but I do think the super cycle is a real thing. I do think like, I'm not looking to like, sell out on high conviction coins. A lot of the lower conviction coins I have cut, but I'm not looking to sell out on high conviction coins because, I think it could go down a little bit more or whatever, right? Like, I'm happy with what I hold right now. I'm happy with kind of the long-term prospects of them. And so I'm just going to kind of run with that. But it's just one of those things where it's like, you have to always acknowledge the market state that you're in. You can disagree with kind of where it is, but you should always be able to see, like, for example, in November or January or whatever, it could have been the top. Yeah, it was the top to a lame market, but it could have been the top nonetheless, right? So it's always just important to make sure that you're staying objective. This is why I have problems with maxis generally, is because it's just, It's just not that like cut and dry, right? So anyway, that's kind of all I had to go over today in terms of kind of state of the market, how things are going. Obviously, we went through and we answered some questions along the way, but overall, long term, I remain very, very bullish. Like I said, short term, we could see a lot of pain. I personally am prepared for that. If you're not, maybe kind of figure out what that means to you. Do you not think we'll see pain? Do you think we will? All that type of stuff. But overall, maybe I'll show you guys some stuff real quick, kind of before we kind of tune things out. But if you guys are looking to trade, I am working with BTCC. If any of you guys watch my videos, you guys are very well aware of BTCC. They do have that 10% bonus on first time deposits. So it's free money. If you like free money, this is the thing that I really do like, is because a lot of the exchanges are like, oh yeah, you can get up to $10,000, right? But it's not a guarantee. This is a guarantee. You put money in, you will get a bonus. So, and then they do have the similar types of things that we talked about, where you get bonuses based on trading volume and activity and doing various things that they want you to do. So you can get still a bunch of like extra money in addition to that, but you do get the guaranteed first time deposits if that is something that you're looking for. I've got that in the link in the description below if you are interested. I also do have links to WEEX and Phemex as well. Phemex is really cool because they have grid bots. I think grid bots are really nice, especially in periods of volatility like this, where we're just seeing kind of a lot of jumping around. Grid bots are really cool. If right now, obviously we're in a bit of a downtrend market. They've got short grid bots, which are cool. So you essentially you take shorts and then sell out of the shorts as things go down, and then when things go up, you buy more short, or you open the shorts again, that type of thing. So you also can do the leverage grid bots too. Those are very risky, so be very careful with those. But that's an option as well. So something to consider there. I do also have my Patreon group as well. I've got a handful of people in there. Super fun to just kind of have more of like a private community for you guys to hang out in and chat with me and kind of get more of like that one-on-one type of interaction. If you are interested, again, I do have, I think it's like $2 or something, very like nominal amount, mainly just because I want to keep bots out. I'm in some free discords, and there's just so many bots that I didn't want to deal with that. I try really, really hard. Obviously, you not getting scammed is on you, and it's your own priority to make sure that doesn't happen. But, I do try very, very hard to kind of make sure that my community is protected, and there's not many, there's not much risk going on there. Right. And then I do have WEEX as well. I think, I've got a WEEX trade open on Doge right now. You can see, so that's kind of cool. What happens with it, we'll see. But WEEX is also really good. I do trade on WEEX a decent bit as well. They also have, I think, 20 to 30,000 of deposit bonuses, but it's like, you got to do a lot of stuff. But I think WEEX is really great. Their trading, their trading system is good. Their kind of UI, all that type of stuff is great. So something to do there. And then I do also have my X account. I've been posting a lot more on my X account recently. I've seen a lot of growth here. I think, I'm over 600 followers now, which is fantastic. So if you guys are interested in kind of, seeing some of my thoughts that may not always come through on YouTube, just because, I do, YouTube does take a little bit more time to kind of create the videos and craft all that type of stuff. This, I can just kind of stream of consciousness, just kind of put stuff out. And I do have a lot of stuff kind of more like, hopefully more kind of like short form educational type of stuff too. So if you want to follow me on Twitter as well, or X, feel free to do that. But yeah, that's my shill session over. Let's see if we got any questions. Let's see. Yes, Jack, thanks so much for tuning in. I really appreciate you joining. Definitely enjoy the time with the family, especially, in the market like this. I think some people tie their value to how much money they can make, which is just completely wrong. I think having kind of that time with family is really, really important. B-Dog, look into it. Let me know what your thoughts are. I think their trading is pretty good. One thing that they do, and just in full transparency, one thing, BTCC does not do isolated positions. So if you like to leverage trade with isolated positions, probably not a good option for you. You can go use WEEX instead. I actually have started using cross positions. I know it's risky. Do not do this if you are new. Do not, because you can very, very easily wreck yourself, because unless you understand at a very deep level how to do cross trading, very risky. So BTCC does cross by default. WEEX allows you to kind of choose which one you want to do, but that's just something that that you can do if you are interested. So anyway, yeah, thanks so much, guys, for tuning in. It looks like we're kind of drawn to a close on the questions as well. So I'm going to go ahead and end it here. If you guys have any questions, obviously just leave them in the comment section. I do read and respond to all of those. So if you have anything you want me to see there, that'd be great. So anyway, thank you guys for tuning in. We'll catch you in like the next live stream, next video, any of that type of stuff. Oh, also like, subscribe, share, all the things. I probably should have said that like an hour ago, but it's fine. I'm not good at the YouTube stuff. So, but yeah, appreciate it, guys. And we'll see you in the next one.